In the first chart, we discuss using major support, or resistance lines. Here, we see a triple bottom, which is an indication of strong support. Traders can look to enter long, when price bounces off such strong support zones. Over here, we see the Tenkan-sen crosses Kijun-sen under the cloud, but, as we have learnt, we can wait for a confirmation from Chikou span breaking the cloud before going on a long trade. When Chikou breaks the Kumo 26 periods ago, current price is here, and this will be a safe entry for a long position. We confirm this with a bullish and thickening cloud ahead. In this second chart, we explore how Fibonacci retracements are used with Ichimoku trading. Fibonacci is commonly used with the Ichimoku to identify additional support and resistance levels. Fibonacci lines are drawn from a significant low to a significant high, and vice versa. In this example, we draw the Fibo line in the direction of the dotted pink line. Depending on your charting package, the horizontal purple lines should appear, displaying Fibonacci support and resistance lines. 38.2 and 61.8 are the most commonly used support lines. Here, we see how price is retraced to the 38.2 line before resuming a bullish move. How is this used with the Ichimoku? Assuming you miss the Kumo break, you can wait for a Fibonacci retracement before entering a long trade. In fact, many experienced Ichimoku traders prefer to enter trades on retracements. So far so good? Let's move on to another Fibonacci example. Here, we can see how the Fibonacci lines offer support and resistance at the first level. In this fourth example, we use the Chikou as confirmation. Over here, we see a Kumo break. Should we enter a long trade? Let's look back 26 periods ago. Chikou is still in the bearish zone, below the cloud. It will be safer to wait for the Chikou to break above the Kumo before entering a long trade. In this example, we explore how the Ichimoku system in itself offers multiple confirmations. Current price has broken the Kumo cloud, which is a bearish sign. Look ahead, and you see a bearish Kumo twist. Some traders may choose to enter a short trade here, but you can make a safer trade by waiting for the Chikou to break below the Kumo. So far so good? In this example, we see a channel being formed, where prices are sandwiched by major support and resistance lines. Notice the whipsaws, with Tenkan-sen and Kijun-sen crossing each other repeatedly. This is what we call a range-bound market, and it will be advisable to stay out of trend-following trades. Again, we witness whipsaws in this chart. Notice how the Kumo clouds are horizontal and thin, as opposed to thick and sloping clouds seen in trending environments. Ichimoku traders usually avoid trading in such price setups. This is another example where Ichimoku traders usually stay out. Notice how clouds are so thin, prices are consolidating inside a tight channel. Chikou is chopping in and out of price. For a long position, we will be looking for Chikou to be clear above prices, with thick Kumo clouds ahead. In this chart, we briefly visit candlesticks, which are so commonly used with Ichimoku. Over here, we see a hammer formed, which is an indication of price reversals. If you are in a short position here, you will be cautious when you see a hammer. This is an example of how candlesticks can be used with Ichimoku. In this last example, we see how the Kumo serves as excellent support and resistance. With prices being contained by the Senkou span A and Senkou span B. Once again, we can wait for the Chikou to break above the Kumo before entering a long position. Now that we have seen how to apply the Ichimoku in various scenarios, let's move on to numerous other topics from StreetPeeps.com.